This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, June 2nd, 2015. Euro dollar. So the pressure in the euro is back on the downside since the market recently broke back below a previous neckline resistance in the 110.50 area, and the focus now is on an immediate retest of the recent lows that we saw from last week at 108.20. Below there, we see a retest of 106.60, which guards against the critical 2015 and 12-year low at 104.62 further down. At this point, any rally should continue to be very well capped into the 10.50 area, while ultimately only back above 12.10 would compromise the immediate bearish outlook. Sterling dollar. So cable continues its declines off its recent 2015 high at 158.15, and the focus now is on a retest of the recent low that we saw going back to the 5th of May at 150.89. This level guards against critical support further down in the form of the 2015 base at 145.65. At the moment, any rally should be very well capped ahead of 155. Dollar yen. So dollar yen has done a good job of rallying since breaking out above that multi-week, multi-month range resistance at 122, with the market now focused on a push into the 125 to 130 area further up. However, with daily studies now well overbought, with the RSI now trading just around 80, there is risk for a short-term pullback before the market looks to reassert to the top side. Any setbacks should, however, be very well supported by that previous resistance at 122. Euro Swiss. So despite recent setbacks in Euro Swiss down towards the 103 area and just below, these setbacks are expected to be very well supported, with the market leveling out over the past several months and finding some good support ahead of 102.35. At this point, look for a break back above 105.25, the recent recovery high going back to the 30th of April, to open a fresh upside extension towards the 108.15 February peak. Aussie dollar. So Aussie trades within a downtrend, and the market looks like it wants to carve out a medium-term lower top at 81.63 to be confirmed on a break and close back below 75.33. At this point, any rally should be very well capped ahead of 80, while a break below 75.33 would open the next downside extension towards the 70 area further down. Dollar CAD. So dollar CAD is firmly locked within a very strong bullish uptrend, with the market recently putting in a medium-term higher low at 1920, ahead of what should be the next upside extension above the 2015 high at 28.35 and towards the 2009 peak at 130.65 further up. Kiwi dollar. So Kiwi has recently broken down below its previous 2015 base at 71.76, and this exposes the next downside extension towards the 65 area further down. At this point, any rally should be very well capped ahead of 73, while ultimately only back above that medium-term lower top at 77.44 would compromise the bearish outlook. SPX 500. So the S&P 500 continues to show signs of potential top despite trading to recent record highs at 21.37. Look for a break and close below recent support at 20.99 to confirm and open the door for an acceleration to the downside back towards critical support at 20.40 further down. Gold. So despite recent setbacks, gold continues to show signs of basing off that 2014 low at 11.30, and the market looks like it wants to hold above 11.70 right now in favor of the next upside extension above 12.32, which should take it to an acceleration into the 1300 area. At this point, only a daily close below 11.70 would compromise the recovery outlook and the basing outlook for gold.